Thank you, Mr. Speaker and members. And I know it's been a long time, but I do want to address some things. We've heard 5 hours, when I checked, 5 hours of third reading speeches. And, they were, disproportionately from one side of the aisle. And so I hope everyone will indulge me to address some of the things that were raised. Other than Representative Hamilton asking me a question and Representative Mack, I've really just been watching everyone, and it's been an interesting 5 hours. But I do want to comment about some of the things were said. So, I will tell you that I have voted for billions and billions of cuts that were permanent to the state budget, and I have voted for lots of tax cuts, and I voted for tax increases. And none of these things are fun. But leadership means that you have to look at the choices before you and do the best you can to balance them. And we've mostly, for the last dozen years, been either going into debt or cutting. And so this attempts to write that strategy for the state, and we understand there's just a fundamental disagreement about that. And I respect that. And I want to reiterate what I said at the beginning today for folks who weren't on the floor. It has been an incredible honor, Mr. Speaker, thank you, and to all the members of the Tax Committee bipartisanly. If you're not on the Tax Committee, you should try to get there because it is an incredible group of people. And that's every single solitary member of the committee, and I appreciate that so much. But to some of the things I heard, I do want to address a few, and I kind of wrote them down in order as I heard them. Representative Runbeck, you called the Homestead credit a sham, a scam, and a slush fund, and we disagree. So we're bringing that property tax relief back, and if people don't want to vote for that, vote no. But this side, at least, doesn't feel it was a scam, a sham, or a slush fund, and I hope people can think about that a little bit. Representative Erdahl, you talked about President Lincoln, and then we heard Representative Bly later say he didn't know that what you said was really President Lincoln, but you did talk about this bill pulling people down and punishing the rich, and I couldn't disagree with you more, Representative Erdahl, and we're friends. This bill doesn't punish the rich, members. It absolutely does not. There is, in this bill, an increase, contrary to what you've said, on 1.1% of Minnesotans in the income tax system. And I'll go through why later what people are saying is inaccurate. It also doesn't pull business down. It affects 3.3% of all S corporations and small businesses. It's on your desk from the Nonpartisan House Research. You can look at that yourself. And who are those 3.3%? Never mind that 96.7% are not affected. Let's just talk about those 3.3. They are people who have to earn over $400,000, but only after they've deducted all their business expenses, all their health care for their employees, all the loans they might take out, all the capital equipment they might buy, and any business expenses that they can legally do. And they've chosen to pay themselves because they set their salary at more than $400,000 a year. They could decide to pay themselves $399 and put that additional money into a purchase or an employee. They could hire some people and they could avoid the tax. But 96.7% of small businesses are not affected by this tax and indeed receive many business tax cuts in this bill. And 3.3% are, but only on the dollar over $400,000 they earn after they get to deduct everything else that's going on. And for folks who earn $400,000, and I represent those people, I have a number of people who are wealthy in my district, and it's been interesting to hear a lot of people define who these people are, and I will tell you some of us have a little better insight as to who they are because we work for them. But to those folks who just earn $400,000 but aren't the owner of the business, they don't get to avoid the tax. They don't get to figure out how to deduct all their business expenses and take out loans and hire people and deduct all that. So there's plenty of those people too, and they have to pay the income tax increase here as well. So it's 1.1% of individual income tax filers and 3.3% of small businesses. Representative Detmer, you talked about your chagrin with not having the military veteran retirement pay in here, and you said shame on the Minnesota State Legislature. And Representative Detmer, I don't agree with you. Folks, we are doing huge things for veterans in this bill and the other bills you've heard. And we are trying to target those who are at the most need. homeless veterans, folks who've served, maybe been injured, maybe have a head injury. The bill you heard Representative Detmer talk about only worked for folks who had 20 years in. They tend to be wealthier folks. And I've talked to folks about who've carried this bill in the past. The idea, that it's sold on is that only, it would help people move here. And I've often said, why don't we just provide the benefit to someone who moves here, not to all the people who are here? And nobody's interested in that. We do have to make choices, and we are providing a jobs credit so employers can hire veterans, and we think that's a much more needed thing for our veterans than to figure out how somebody who may have never seen comment and has 20 years in and has had the taxpayers pay for their health care, pay their salary. We owe them a debt of gratitude, but we have to prioritize. And so we've got to start with our homeless veterans and folks who are needing a job, and that's what this bill does. So we are preferring those veterans, and I don't, I just disagree with you on your comment about shame on the Minnesota legislature. I've been disappointed to see the veterans issues politicized. We had an incredible testifier in taxes, Mr. Diamond, who's a veteran, who was roundly fought reducing, taking away military pension, having folks not pay taxes on that. And he begged us to get to folks who need a job and to folks who are having a hard time integrating with their families and who have been injured, who have seen combat. And we're trying to do that. Representative McDonald, you said we should be ashamed of this bill. And reasons I'm mentioning some of these things is I personally try not to engage in superlatives, and I know people get dramatic about these things, but people are saying them into the record, so I feel I need to respond. We Representative McDonald, you said this is the highest tax increase in 3 decades, and that's not accurate. I think Representative Earhart did a nice speech in taxes. He can tell you about a gas tax bill that happened a few years ago. And in 1991, the income taxes were raised, and then there was the Minnesota Miracle. And so when people make these statements, I don't know where they get them, but they're not accurate. I did hear you say also, Representative McDonald, you're concerned about the income tax, and again, it was raised in 1991, last into a rate lower than is proposed right here in this bill. It was raised to 8.5. The alcohol tax was also raised repeatedly, members, 26 years. 26 years. The liquor industry is very powerful and has stopped any new contribution in the excise tax on liquor for 26 years. While the cost of the use of that discretionary purchase continue to rise for all taxpayers. Representative Metsa, I want to thank you. You got up and said what you didn't like, and I appreciate that. And you're demonstrating leadership by acknowledging what all of us feel, at least for the folks who are going to vote for this. There's stuff we all don't like. That's right. That's right. But leadership says someone's got to stand up and deliver, and I appreciate that, Representative Metsa. Representative Sosinski, you said this is the e-poll tabs of tax policy. I'm not sure what that really meant, quite frankly. But you went on to talk about how we would be dipping, it was worrisome that we might be dipping into the reserves, and yet I noted that, Representative Sosinski, you voted with Representative Woodard earlier today to use the budget reserves. And, I think members, you have to think a little bit here about, what we're saying. So I got the roll call and checked, and there was a whole bunch of people who voted to deplete our budget reserves rather than take care of the school shift and the way we're handling it. Representative Hamilton, you talked about the long-term credit, and I probably have to put my glasses on for this one because I just really want to correct the record on this. Members, the long-term care credit was enacted as a way to save the state money. That's what it was all about. Except it isn't doing that. The long-term credit has been an abysmal failure. It's the Health and Human Services bill that's paving the way here. Members, a number of academic studies have been done looking at tax incentives for purchasing long-term care, and all of them show that they cost more than they save. And they cost more than they save both the federal and state government and Medicaid costs. And most of the studies suggest that $1 of cost yields less than 50 cents in savings. The best study we could find was that there was an 84% benefit on the dollar. That's a terrible deal for taxpayers, members. From a state perspective, the cost-benefit ratio is even worse. The state pays for the credit, but over half of the cost of the credit goes to the federal government, both through lower Medicaid outlays and higher income tax collection, because the credit is reduced in the itemized deduction part of the income tax. So it's an abject failure. People should have the guts to get rid of things that don't work. Studies similarly on the long-term credit show that folks who buy the insurance and use the credit are not the most likely to use MA and save the state costs. In fact, surprisingly, they are higher income folks with higher net worth individuals who will need to use many of their own resources to pay for their long-term care. So I know I could give you a lot more on this, but some people purchase long-term care and we give them a credit and then it's wasted on them, and then other people purchase it and then they leave. They don't renew their policy before they want to use it. So I do hope members, maybe it's not serving on tax committee, but there is thought in some of this. Representative Keel, you talked about the aggregate tax, and then you said that you talked about your husband being a smoker, and you should know, and I hear that about the smoking situation. I smoked in high school. We're all subsidizing smokers. That's what we're doing right now. Every one of us is subsidizing smokers. If we continue to have cigarette prices too low, we are, in the situation now, as was mentioned by people, by raising the price of tobacco, you absolutely won't get everyone to quit, no doubt. That's why the price in this bill picks the elasticity measure that you can get behavior out of the tax by either people not starting, because the youth are the most price sensitive of all, or they quit. Once you hit the level in this bill, you now just start punishing that smoker who can't quit. And we're not doing that in this bill. We picked the number that meets the elasticity argument of people who are making that argument. But in the meantime, members, the cost of tobacco to all of us, every single Minnesotan in the healthcare system, don't begin to be fixed by this tobacco taxes. Representative Keel, you should know, and I could do this on every member, but I won't. The city you live in will receive $460,000 new dollars in LGA. Your homeowners will get an increased refund, and your renters will get the renter's credit back. And these are the choices people have to make. And we're happy to have people make that choice here. Representative Bly talked about Lincoln and the first income tax federally. And again, that tax in Minnesota hasn't been raised since 1991, and it was raised to a higher level than is proposed in this bill. Representative Hansen, thank you so much for clarifying many of the inaccuracies that were being stated about your silica sand approach. Representative Runbeck, you spoke again, and you said more about how everyone will leave the state, and we're having folks leave the state. And I passed something out for folks to read about these claims, and really there is no data about that. Now, there's always people who are tax sensitive. And many of the stories, in fact, we watched people read emails into their microphones and tell anecdotes and all these people they know, and that's current law. So there's already people who always will do things to avoid a tax. Some people move to go to better weather. Some people didn't move to be by their grandkids. But when you try to isolate why people are moving around, it's much more difficult to prove, to show that a tax does that. But there have been studies done in New Jersey, and New Jersey found that when they had the millionaire tax, that there was close to zero impact on what happened in New Jersey. When Maryland saw their drop in millionaires and people were asserting, oh look, millionaires in Maryland, it's true, everyone's fleeing. In fact, that wasn't true. What happened is they simply stopped being millionaires because of the recession and didn't leave the state. Their incomes just went down. So they didn't pay the tax. And, I encourage people to read the facts on this stuff. Representative Leidiger, you said that this bill was terrible. And you talked about your family being from a long line of brewers, and I don't know if you didn't have the opportunity to talk with folks about what's going on in this bill, but there are no small brewers in Minnesota affected by this tax. People are asserting lots of things that aren't accurate. So unless your father is brewing more than 500,000 barrels of beer, he's not going to pay this tax, and there's only 2 businesses I know of that do that in Minnesota, so they're exempt from the tax. And there was, further discussion about prohibition, and, I will remind members, I'm not a fan of prohibition. I drink, but I'll tell you, we tried prohibition in this country, it didn't work. But to say that because it's a legal thing that we enjoy, that there aren't costs to the state budget. Really, members, I passed out some conservative information. I could have passed out the information that showed alcohol cost our state $7 billion a year. There's another study that says $5 billion a year, but I chose the $2.8 billion study. It's on your desk, asking the alcohol liquor industry and those who enjoy, including myself, to pay 7 cents on a drink to help defer that $2.8 billion cost a year to the state of Minnesota is appropriate. Because when we don't ask users who use things to pay the costs more relative to the volume they're using, then all the rest of us pay for it. So that's what's happening now. And Representative Clark worked very hard to try to educate people about the costs, both in chemical dependency, in the healthcare system, and public safety, in our courts, police, DWI, jails, etc. And so this 7 cents a drink doesn't begin to deal with the cost that all Minnesotans are paying for alcohol. And again, these are discretionary purchases, members. No one's forcing anyone to do this. But if you drink less, I think it's 80% of Minnesotans drink less than 1 drink a day. So it's 7 cents a day, and I think that's reasonable. But we have some people who are large users, and they get into trouble often, and it's fair that they be asked to contribute a little more for the first time in 26 years, members. 26 years. So, there was discussion about that. Representative Albright, you talked about things depend on a robust economy, and you said that Democrats had a thesis that raising taxes are good. And I want to just, discuss with you a little bit that, I think when we try to speak for one another, that's difficult, but I don't share that belief. I think raising taxes do create drag and harm, and I think cuts do as well. And it's that's part of the problem here is we spend time talking about the taxes, but we don't want to talk about cutting things hurts people too. And it hurts people in very personal ways when they can't cobble together a way to get their kid to college, or they can't get the health care they need for their mother, or they can't, get the transportation system they need in their community. So cuts have that same effect on the economy that tax increases do. I know Representative Davids doesn't like the word balance, but maybe the better word is a moderate approach. And the proposal we've got in the budget is cuts and taxes. So, I know that Representative Albright, you also mentioned that, something along the lines of defending high-income folks, and I want to defend them too. And again, I think folks should think about who in this room might spend a lot of time with those people. And I think the characterization of all high-income people are the same, and they, all are going to flee, or they all hate taxes, or we are all after them on this side. We want to go after the rich. I just don't find any of that helpful. So, I did note that Representative Albright, you did vote for the $550 million new dollars, or no, actually you did not. But I looked at the list when you were talking, and I noticed, 10 or 12 Republicans voted for Representative Marquardt's $550 million investment in students, and I bet some are going to vote for Representative Pawlowski's higher ed bill. And I just would ask people, please tell us how you're going to pay for that $550. And if it's cuts, fine. Just say what they are. Just say what they are. Representative, you said we're waging war on work. And Representative Drazkowski, you and I like each other a lot. But, I'm not trying to wage war on work. And I really have to tell you, I don't think anybody over here is. I know there's a fear, and that's just a fundamental philosophy about, tax increases chase the wealthy people out of Minnesota, but the facts don't support that. In fact, the largest amount of wealthiest Americans live in some of the highest tax states in the nation. And so I'll tell you, it isn't as simple as a tax rate. You have to have, you have to have your market, and if you're a business owner, your market, your employees, your commerce. And you can't just pick that up and run. And people also of high incomes are very attracted to a very high quality of life with lots of amenities. And we see them clustered in places like New York City and Chicago and California. And so I think people often, don't want to acknowledge that there's many things going on there. Representative Drazkowski, you also said that, the federal conformity piece was that I was, going to tax all these other people, and, and so did others. Representative Loon talked about that, and, members, people are confusing, I think, what's going on in the bill here. If people don't want to get rid of the marriage penalty, then vote against the bill. If people don't want to pass on all these tax cuts to people in a way that's a moderate tax cut in the income system, not even revenue neutral, but a moderate tax cut, vote against the bill. There was this discussion about 30% of the bill is paid by people who smoke and drink. That's not accurate. Representative Fisher, you're absolutely right. You talked about the liquor industry, and I know Representative Zellers, attempted to correct some of that from his perspective, but Representative Fisher is absolutely right. There's nothing in the bill, and I would challenge anybody to tell me in the bill where anybody in the liquor industry has to pass on more than 7 cents a drink. And so we're hearing people go out and saying, well, it's not really going to be a 12-pack 7 cents, 84 cents. It's going to be $4. That's not true. That's not in the bill. And for all the folks who are going to have this tax, remember, it's not paid by the business, it's paid by the consumer. It's passed on in the price. That's the point of it. It's a user fee, like a gas tax. You need to go ask all of them why they're going to take a pound of flesh out of their consumers that they care about so much by taking this time to their advantage to get a little profit in there. Because there's no reason for that. Representative Drazkowski, you said a few more things, but I won't get into that. Representative Benson, we don't know each other very well, and we haven't served on a committee together, but you called the bill a pig. And then you said that we're going to add taxes on everything conceivable. Please, members, it's frustrating to me, I will just tell you, when Democrats do it too, when people say things that aren't accurate. We are not adding taxes on everything conceivable. So I guess I have to just say that in the record, and since people want to say things like that, I think Representative Benson, you also said there's no class that doesn't get hit. That's not accurate either. So, I won't go into too much detail about that, but, calling the bill a pig and that kind of stuff, I don't know what people get out of that, but I'm sure it'll be used in a campaign somehow. Representative Uglum, you said this bill moves us completely in the wrong direction. And you said that taxes are a drag, and I'm telling you that so are spending cuts. And you said we are in a fragile state, but you voted for the K-12 bill as well, and that cost $550 million. You also said this was the largest tax increase, and that's not true. But like you said, I believe that you worried about our future economy, and I do too. And I'm doing my best, along with the majority, to do the most reasonable, moderate, centrist approach. I will tell you, we have plenty of folks who wouldn't mind having no cuts, but we have cuts. And I know this side has plenty of folks who want all cuts, but no one will tell us what they are. But the centrist, moderate, reasonable approach is to do some of both. So that's what's happening here. Representative Lomer, you talked about the military families as well, and you, like others, I would ask, were you going to raise taxes to pay for that $44 million bill that Representative Detmer has that you supported? This money doesn't fall out of the sky. When we pass tax expenditures on, we have to pay for them. So these bills all cost money, and yet, folks don't appear to be willing to pay for them. You asked Representative Lomer, why on earth would we repeal the long-term health care credit? And I told you why if you were in the room. Again, it's been an abject failure, and mostly we give the money to the feds and it doesn't do anything. But you went on, Representative Lomer, to say that you don't understand how we could be going after these subchapter S corporations. Again, we're not. 96.7, not affected. In fact, getting business tax cuts through the capital equipment refund and Section 179 expensing and other federal conformity provisions. Representative Quam, you said this is a stone-cold job-killing bill. Again, I'm just not getting where people are seeing this. You know, I do want to say, though, as you mentioned that, while the Minnesota Chamber did not support the bill, I will tell you, if you read the letter that they sent out, that they thanked us for our affiliate nexus provision, our upfront capital equipment exemption, our Section 179 expensing, federal conformity, which unfortunately has been, in my opinion, misconstrued here, and multiple points of use for software licensing agreement in the Mayo Destination Medical Center language. So I think there's, you know, some good news there, even if someone can't support the bill. And I only have a few more. Representative Petersburg, I'm sorry we haven't met, but you said that we shouldn't start with the wants, or we should start with the needs, not the wants. And I agree with you, because you used some words that I agree with completely, even though we take a different approach here. I think this bill is all about discipline. And you mentioned that word a lot, and I agree with you. It is frugal, and it is the hallmark of discipline to pay your bills before you start spending. And so, members, we do have to start with what we have to do first, as Representative Petersburg said. And so what do we have? We have a $627 million deficit and $854 in the school shift. Those two provisions, $1.4 billion still of deficit. I mean, people are acting like there's a surplus here in saying how things played out last year. Nope, there's $1.4 billion of bills to pay. And you could come forward with what $1.4 billion in cuts, but that hasn't happened. So, you know, I do think it's discipline to say that before we do things like Representative Marquardt's bill and Representative Plowski's bill and others, we have to honor our commitments first. We got to pay off that credit card and get rid of the deficit, and that's what this bill does. You also said that you thought that some of us think that only government can reinvest, and I don't think that, and I want you to know, even though we don't know each other, that I don't think that. I understand that a healthy private sector is critical to a good economy, and I will tell you that, you know, these are part of the trade-offs we're making. Representative Franzen, you read a number of, I don't know if they were, I can't remember now if they were emails, and you talked about tourism, and I will tell you that the largest tourist place in the state is in my district. 46 million people visit my district a year, and you know, you talked a lot about who the wealthy folks were, and I think I know quite a few of them, and I don't know, I think you were trying to say that maybe they didn't live in your district, but they do live in mine, so I think I have some insight to that. But you said that somebody wrote to you and said there was 50% of the next dollar earned was taxed, and that's not in this bill. So I hope whoever sent you that, you could tell them that that's, I don't know what they're referencing, but that's not in this bill. Representative Fabian, you talked about a number of issues, Marvin Windows, and I think you mostly referring into the Senate tax bill in the Star Tribune. It's not this bill, it's a different bill. But I know President Obama came to visit your district. I don't know if it was physically in your district, but I think the president, you know, used that company as an example of a community, of a CEO, and I don't know his name, but what he said was that, you know, we're not laying any people off, and that's kudos to a great company up in your area. And so the idea that, you know, things can get tough and people might have to pay a little more in taxes means everyone gets laid off or people flee. You know, your district is Exhibit A that that's not accurate. That CEO decided to keep everyone employed. Representative Newberger, you talked about three things, and you called the bill an addiction tax and said shame on it. And you talked about the users of cigarettes and alcohol, and I'll repeat, you know, that folks who are large users of these, we're all subsidizing them. And that's not fair. You know, you talked about temporary taxes never go away. You know, there's plenty of temporary taxes that go away. I mean, I sure hope all of you who voted to make us build you the Twin Stadium think that tax is going away, because we sure do in Hennepin County. And we have all kinds of local taxes that go away, and the past surtax that was put on for the income went away. So, you know, I can provide you with that information. You also said that we're taxing charities. We're taking $44 million out of charities. We're not taxing charities. It's not in the bill. We're changing and preferring, saying that everybody gets the same preference. The fact that there's a net savings due to the reform of this deduction being turned into a credit is incidental, but it doesn't tax charities at all, and in fact incents more giving. Representative Gunther, you commented about how everyone's going to leave here too, and you talked about a teacher. I don't know if it was a teacher and a firefighter, I can't remember, but I don't know which teacher or a firefighter you know that makes $400,000 a year. This bill only taxes folks who make over $400,000 a year, and if somebody's paying firefighters and teachers a combined income of $400,000 a year, I think we'd all like to know where that's happening. So, you know, you know, again, if people have a company here, a market here, a family here, there's a lot more going on than tax burden. Or are we saying that people are leaving Minnesota because they'd have to pay 7 cents for a glass of wine? It's a stretch for me. Representative Simonson, thank you for your talk and for much needed facts being infused at the moment when there were many that I think weren't accurate. Representative Norton talked in great length about the DMC, and Representative Norton and Representative Liebling have been leaders in their community. That's been, you know, a stretch from some of us, but I think we're all, you know, moving to a place where the tax policy is better, Mr. Speaker, and where we can ensure that Mayo wants to continue to grow in the state of Minnesota. Representative Freeberg, you said it all. Raise it for health. The Clearway Coalition and everything they're doing, the public health costs of tobacco tax, the data is irrefutable, members. The best thing we can do is raise the price. No doubt about it. Representative Faust, I appreciate your comments, you know, about the hollowness of some scare tactics that I think were going on, and you talking about Minnesota's history. Representative Clark, thank you for talking to us about the cost of alcohol. That, in fact, I would bet there isn't anyone in this room who doesn't know someone who's struggling with alcohol. Representative Loeffler, you know, you talked about, and I thought it was just so helpful, Mr. Speaker, for people to hear what we're talking about in that $500,000 earner. So she walked us through how that person who might live in my district or the Speaker's district or Representative Rosenthal's or Seltzer's, who earns $500,000 a year, and they make $50,000 a month. They make $50,000 a month. And after the tax, they'll only have $49,560 a month. So, members, it's a choice. If we want to fund our schools and pay for all the things we want, yes, we're going to ask those people to pay a little bit more. Not ask, we're going to tell them. If that makes people feel better, yes. If this bill becomes law, they will have to. It won't be a choice, and I proudly defend that. The tax incidence in the state of Minnesota calls out for that kind of activity. If you're okay with keeping things how they are, defend it to me now. Explain to me why you're okay with this. Why are you okay with the income inequality situation that's happening in the state of Minnesota? Doing nothing. That's irresponsible, members. That's saying it's okay to continue to ask people who are not doing as well in the economy to bear a bigger burden than everybody else. It may not be in the form of taxes, but it's in losing their services. And we know when you cut people, when you cut spending in the state government, it disproportionately falls on people of modest means. Why? Because most of what the state does is means tested, other than school funding, and there are some exceptions there. But we don't give free college to multimillionaires, and we don't give free health care to billionaires. We try to go through every line and find out all that waste and fraud and inefficiency, so we're just targeting our taxpayers' money to those who need it most. So when you cut things, you automatically make the budget more regressive, because you're going after those with the least ability to pay. So unfortunately, if you want to have a balance between regressivity and progressivity, you do have to ask those people at the top of the income scale to chip in. And that's what this bill does. Or I should say tell them, because I know that offends people when people say ask. Representative Pugh, you talked about the excessive DFL spending. And you talked about that you knew somebody or I can't remember if it was someone you knew, personally knew, or they sent you an email and you were reading them, and they said, they paid $100,000 in state income taxes last year. And so I did the calculation, and that person would have to earn $1.3 million. So they probably did pay that. And they earned $1.3 million. That's who we're talking about, members. You also stated that there was somebody who paid 50% of their income in state and local taxes. And the only people who do that in Minnesota, Representative Pugh, the only people who pay 50% of their income in state and local taxes are the poorest Minnesotans. That's who they are. That's who pays the biggest burden. You have to be incredibly poor to hit that mark. Those are the people who pay the highest percent of their income in state and local taxes. They're hard to find. There's a lot of them who pay 30%, 40%, 50% is pretty rough. But there are no wealthy Minnesotans paying that. So I don't know who these people are sending them emails. I hope they'll send them to me. Representative Lean, thanks again for getting some facts out there and for all your hard work. Representative Anderson, I don't think we met either, but he talked about prohibition a little bit and the barrel issue, and there's been a lot of confusion about these numbers that say it's this on a barrel, so it's 600%. Members, it's 7 cents a drink. In a barrel, I have the calculation you want to see, and there's how many glasses. In a bottle of hard liquor, it's how many how many glasses, how many drinks. In a bottle of wine, they're all calculated out to hit 7 cents a drink. 7 cents a drink. So if you're drinking, 5 drinks a week, 35 cents. And you can do the math on what you're going to pay over the course of a year. Representative Abler, you talked about HHS, and you said that we cut too much. So that was kind of interesting, and that confirms that this is a centrist sort of moderate approach, because there are cuts. Yes, there are. In fact, but there is more revenue than cuts, because we've been on the cutting mode for a long time. And as I've stated, I voted for billions in dollars of cuts too, and I did that rather than shut down the government. I compromised with Governor Pawlenty. I didn't want to, but I sure didn't go to shut down over it. I talked about elasticity a little bit, and Representative Abler, you talked about this growth that's happening, but you left out the other side of the equation, which is there's projected growth in the amount of people who are aging, so that raises our health care costs, and there's projected growth in birth, so that's built into our projections as well. Representative Hertaz, you talked about the tax incidence, and you said, you talked about the top 10%, and this bill actually affects top 1%, but you talked about the top 10%, and you said that they pay 50% of all the income taxes, and members, they have 64.8% of the wealth. So, that's part of the problem here with the tax incident report, and that's the survey of consumer finance with the Federal Reserve. Those top 10, the top 10% of Minnesotans have 64.8% of the wealth, and they pay 56% of the income tax. The low deciles don't have that good of a deal. Representative Torkelson, you said this bill was embarrassing, and we should make it simpler, and I agree. I wish it were simpler, and there's a constant tension between fairness and simplicity. But because, as you talked about, to get to where we maybe want to go in aids and credits, it might take $800 million. That's not an argument to not put in 80. Because we're not spending the $800 million you'd like, and we're just spending the 80. I didn't think that was an argument to vote no on the bill. Representative Garofalo, you said that we've become totally unhinged. I don't think we've become totally unhinged, but I will tell you, when you talked about the highest income tax rate in the state, and that would bring volatility, and there is volatility mostly in the capital gains area of income tax. But, members, there's a lot of volatility that happens when people don't want to solve problems in a way that is sometimes a little more difficult. And we got dinged here in this state in September 2011. You all know that Standard & Poor's reduced Minnesota's rating. We should be worried about that. We can't keep going on doing these shifts and gimmicks, and I've done them too, but it's got to stop. So this bill says it's time to stop. So Representative Mack, you talked a lot about the charitable credit, even though you asked me about it, and I did see someone was trying to talk to you, so maybe you didn't catch it, but that, the portrayal after that wasn't accurate. You called it a money grab. It's not a money grab. And you said there's nothing to motivate people to give more, and that's not accurate in the bill. And I would ask any charitable organization in the state of Minnesota to call me and tell me where in this bill there's a tax on them and where in this bill there's less incentive to give to them. Because that's not in here. Representative Zellers, thank you for your kind words, Mr. Former Speaker. I've had the pleasure of serving under Speaker Swigum, Speaker Kelleher, Speaker Zellers, and now Speaker Thiessen. And you're a kind person, Representative Zellers, and I appreciate you saying that. But you asked, who are we standing up for, and I think we just have a disagreement on what we're trying to do here. You talked about we're going after the lunch pail people, and I don't see that in the bill. You have to be in the top 1.1% of earners to pay the income tax increase in this bill, and there are discretionary purchases you could make by your choice without anyone requiring you to, that you would have to pay 7 cents a drink and more for the cost that the rest of us bear for cigarette smoking. Representative Anderson, you talked about the 30%, not 1%. That's not accurate. I passed out to folks, and Representative Loon talked about this some too, the list of the things that we're conforming to in the bill. And so people were talking about this sum was a tax increase on 30% of people. And I will direct folks who are saying that, and Representative Loon, you were saying that too. Grover Norquist likes this approach. What this approach says is if we're going to do things in a revenue neutral way with tax cuts and the brackets, that's fine. You all passed the test. If you took that pledge, you're okay on this one, because in the omnibus tax bill, you can read the lines of the spreadsheet for yourself and see what's going on here. And the net effect, and it's on page 15 of the spreadsheet, line 70 through 73 and line 89 demonstrate how we're buying 260 million, I don't have it right in front of me, of tax cuts, Mr. Speaker, for Minnesotans. And then we're paying less than that for it. So it's about 235. And so overall, all the impacts that are going on in federal conformity are a net moderate tax cut to everybody who earns less than $400,000. Now, it's small enough that it's not worth crowing about. It's a little bit of a tax cut. It's not completely revenue neutral, but it is not a tax increase, as people have been stated. And I've handed out, Mr. Speaker, what that provision does is it gives 650,000 filers a standard deduction increase for married filers. It gets rid of the marriage penalty. That's what people were trying to call a tax increase. It increases the working family credit phase-out extension to married claimants, 50,000 returns in Minnesota. It allows people with student loan interest to deduct it, 125,000 returns. Get that tax cut. Higher education tuition deduction, 30,000 returns. They get that tax cut. Mortgage insurance premium deductions, 80,000 returns. Dependent care credit, 25,000 returns. 250 classroom expense for educators, 60,000 returns. And I can go on and on. That's the tax cuts in the bill that those provisions pay for. And on net, in a revenue neutral way, slight tax cut, in a way that even Grover Norquist supports, members, we're passing on tax cuts to Minnesotans. Representative Anderson, you also talked about the angel investor credit, and you know that Representative Mahoney and Representative Dabney were the authors of that bill, and it got folded into my tax bill in the past, and I ended up being, carrying that for them as it went through the process. And you said we're running out of money. Members, we just started this program 5 years ago. We're going to study it like we should, and we put a limit on it. And so who are these people we're running out of giving money to? Members, they're very wealthy investors. To qualify to be an angel investor, you have to earn $250,000. So, we do have to make some choices here. So, and that's for an individual. So those are the people we're running out of money to give more money to. You talked about the R&D credit, that I was making it non-refundable, and that's accurate. Representative Anderson, I am the chief author who made it refundable in the first place. Never before had the research and development credit been refundable until I carried that bill, passed it into law, and it's now costing us, it's costing us far too much money than we can afford. We need to rein that in right now. We still have a deficit. So here's how it works. If you have a liability, you still get your R&D credit, and you get to minus that off your liability. And not only do we have it for corporations, we have it for individuals now. But the refundability portion says if you don't pay a nickel of state tax, you still get a check from us. And we just can't afford it. What's that costing us? $83 million. $83 million. We're writing checks to companies that don't pay state taxes, and we can't afford it right now. So we're keeping the R&D credit just how it was before I changed it in 2010. Representative Barrett, you talked about, you know, your story with your family, and it was, I feel I've heard the passion in there. I have to say that I just fundamentally disagree that the solution is to have low tobacco prices. I personally can't defend a continued low tobacco price situation. Representative Pepin, thank you for your work on fiscal disparities. You're absolutely right, but we can't get anybody to listen to us, so it's you and me and a few others. But you also said this is a regressive tax bill, and it's not. Members, it's not. The property tax refunds that Representative Dabney came up with, and the renter's credit that Representative Dabney and Representative Loeffler and others have worked on, and the local government aid pieces, the changing how the top 1% is paying in, the estate tax provisions, and then funding things that are progressive, make this bill a progressive tax bill. It's not a regressive tax bill. I don't know why you stated that, but maybe you can tell me later. Representative Davids, and so you can tell we're almost done because we're to Representative Davids. Thank you for your comments and kind words. I disagree that it's promises made and promises broken. As Representative Dabney said, it's promises kept. Again, you talked a lot about some of the taxes that, again, remember, are discretionary. They are discretionary. They are discretionary. But you talked about someone you knew that their spouse made $400,000 and they made $50,000, and they decided to quit their job rather than pay this new tax. And I want to help them with math if that's what they're doing, because if they quit their job instead of they're making $450,000, they're going to quit the $50,000 job so they can make $400,000 and avoid the tax. The additional tax was only going to be $5,000, so they just gave up, and that's state and federal. So state would have been $2,500, so they're throwing away $45,000. So I don't know who that person is, but I sure hope they're thinking it through before they quit that job, and just to avoid $2,500 of state tax. You talked about the consumption part of the alcohol tax. The alcohol tax here really isn't about an attempt to reduce consumption. In fact, there's good data to show that taxing alcohol doesn't do anything to consumption. And in recessions and in great times, people tend to drink. What it's attempting to do is ask folks who are consuming alcohol to help defer the costs to the state budget. And that's what a user fee is, just like when we have a fishing license. We ask anglers to first pay for their fishing license before all the rest of us chip into that activity. Or the gas tax. We all pay for our gas tax if we use gas, but if you don't use gas, you don't pay for it. And that's a typical way, a widely accepted way to avoid the general populace having to pay higher taxes that they really are not responsible for. Representative Loon, you talked about this whole piece that I already went over on and went through great detail explaining to people why it was 30% of Minnesotans would pay a higher income tax, and you know that people didn't understand this and they needed to go through that. Members, please, again, page 15 of the spreadsheet, line 70 to 73, line 89 shows you that it's an overall moderate income tax cut to Minnesotans, and I read you the tens of thousands of filers who would receive benefits. And finally, Representative Dowd, you didn't do a lot of hitting on individual pieces, so I have nothing to say that I thought wasn't exactly accurate, but you did say there's no solutions here. And I think, because I think I know you a little bit and we enjoy each other's friendship, I think, my opinion is there's different solutions. And we've seen the solutions over the last many years, and they're not sustainable. So with that, members, I would just close up by saying that I was fortunate to be the author of the chief author in the House with Senator Cohen in the Senate of the Budget Trend Study Group. And that was a group of 5 appointees of Plenty's, 5 appointees from the Senate, and 5 from the House. And they kind of looked at where are we going here on the spending and the revenue side. And really, this was, Phil Krinke served on this group, for goodness sakes. It's not sustainable. And so we need to, use one-time money for one-time purchases and use permanent money for permanent purchases. This bill does just that. It is a conservative bill, Mr. Speaker, in my opinion. And it is not, as Representative Davids doesn't like the term balance, it is balanced. It reflects the whole state budget that we're looking at, which is cuts and revenue. It's asking the wealthiest 1.1% of Minnesotans to have to pay a higher income tax. It's purchasing, it's asking discretionary purchases to chip in a little more to the cost they're costing the state, and it closes some corporate loopholes which people really didn't spend any time talking about, so it's good to hear that everybody seems to think that needs to be done, because there really wasn't a lot of conversation about that. One of the last things I want to say is, I think I passed out a letter from the Minnesota Catholic Conference and our local Lutheran churches, and they asked us to take a balanced approach with revenue and cuts. And I think that's what we're trying to do here. I want to underline, lest people think something that isn't accurate, we do have a regressive tax code in Minnesota. We hear people say that Minnesota is very progressive, it doesn't have a regressive tax system. That's not true. We have a regressive tax system, and this attempts to right that a little bit. I guess, it's maybe potentially laughed at, but I do think that this bill reflects what I hear Minnesotans saying who are moderates and centrists and, the voters who can go either way. And that is, I'd like a mix of some revenue and some cuts. And I'd like you to do, these ones first, if you could. People get that the wealthiest Minnesotans are paying less as a percentage of their income than everyone else. It's actually very popular. Governor Dayton ran on it. President Obama ran on it. We ran on it. I think Minnesotans are comfortable with this approach. People also have broad support for raising the tax on cigarettes and alcohol. And there is broad support for closing corporate loopholes. Members, this bill reflects Minnesotans' sensible approach to how we ought to run the government here. And I do want to thank you so much, Mr. Speaker and members, for a long and respectful debate, and I would urge you to vote yes. Thank you.